Welcome back, and joining me for a closer look at what's played out on the market scene today is Imtiaz Suliman from Sentio Capital. Thank you so much for your time, Imtiaz. Let's actually start off with the credit ratings decisions. South Africa, S&P Global affirming its credit rating for South Africa with a positive outlook. And quite interestingly, it's seeming that they're not really worried about the outcomes of the budget. Talk to me about that decision.
Yeah, thanks, Anati. I think what we've seen is a few iterations of what the final budget could look like. And by all indications, it looks like we're not going to see an increase in any form of taxes, although we will get some form of fiscal drag coming through. But that VAT hike that was proposed will not come through. And then from a debt perspective, it also looks like, the debt ceiling is still going to be in play. So then the question comes in, where is the extra money going to come from? And I think you're going to see a combination of a bit more revenue growth, better collection on SARS end, and from a spending perspective, some pullbacks with regards to spending where the government can find some savings. It's going to be quite tough, and it's always a tough time to find savings, but I think from an overall budget perspective, the debt should be largely in check with no added pressure from a tax perspective.
Well, talking about the pressure, there is pressure in the U.S. with Moody's finally joining the choir of credit rating agencies that have downgraded the U.S. Of course, the country going from the best rating to the second best rating. What does this mean, this downgrade, and how are investors interpreting it?
Yeah, initially, I think we got the rating decision quite late on Friday night coming out of the US. And if you look at the market reaction once the US markets reopened, there was a bit of a muted reaction. And again, if you look at what has happened, the first downgrade of US debt came from S&P in 2011. Then we had Fitch downgrading the US in 2023. And now Moody's has followed. So ultimately, you've got all of the three big rating agencies rating the US on a similar rating. So once you could say, it was a long time coming, it does bring into question from here on, the US definitely needs to get their budget deficit under control. If you look at the debt projection out of the US, it's on an upward path. And that's going to be over 100% of GDP in a few years' time. And a lot of the debt repayments are eating into the revenues. So unless they up their revenue intake, the debt is going to continue to grow, and the budget deficit is also going to continue to grow, which is unsustainable. So I think from an overall perspective, US yields are basically the benchmark for the rest of the world. And if that goes up, the rest of the world's yields usually follow. So from a debt perspective, clearly negative. I would expect the theme of, out of the US de-dollarization to continue, although not a wholesale sale of US assets, but at the margin, I think other assets around the world are looking more attractive now, more so than ever.
All right. Well, let's get Vodacom on the line. What's your call on these numbers? When I looked at them, seeming quite tepid growth numbers.
Yeah, if you look at it from an overall perspective, there was quite a bit of hit from currency movements, and in particular, the devaluation of the Egyptian pound. So from an underlying perspective, Egypt grew quite strongly at 45%. But once you translate that into rands, that was minus 8%. South Africa, pretty much mature market from a telco perspective. We've got service revenue growth growing at around the 2% level, although it does look like Vodacom did execute better than some of their peers in the prepaid segment. So that's a positive. But if currencies stabilize here, especially in the Egyptian pound, in the DRC, Tanzania, and the political situation in Mozambique, that is a good outcome for Vodacom, because the underlying growth, as I said, out of Egypt is very strong, and that continues to grow. Their margin was up, the very strong data growth. And if you don't have that hit from currencies next year, I think you could see double-digit growth coming out of Vodacom. So
Okay.
quite a stable company, good dividend. They've upped the dividend payment as well. And that stability will be good going forward.
All right. Before we get to your stock pick, Netcare coming out with interim results, revenue up by more than 5%. Also, core profit with a gain there. Adjusted HEPS up by double digits. At some point, that share was down almost 3%, but it did reverse some of those losses. But those numbers looked healthy, right?
Yeah, I think overall it was quite decent. Although revenue growth is growing around the 5-6% mark, they did manage to grow earnings at 20%, and that's on the back of better efficiencies from a cost management perspective. They did do quite a bit of share buybacks in this period, and they do produce a lot of cash, which they use to either pay out a dividend or do share buybacks. Okay. But from an overall economy perspective, we do need the economy to grow faster. If you look at the medical aid lives covered, that's been stagnant for the past 10 years now. And that's clearly in the target market of these private hospital players like Netcare. So growth is a challenge, although they have to run very hard to stand still, which Netcare did in this period. What also was a positive for them is Easter fell in April this year, which was out of the reporting period, whereas in the base period last year, Easter was in March. So they had a better occupancy rate throughout this year because of the Easter timing period as well.
All right. Well, Imtiaz, let's scoot on over to your stock pick for today. What are you choosing?
Yeah, I'm going with Foschini. I think if you look at it from an overall perspective, and I think from a South African perspective, inflation has come down quite significantly. We've seen some easing pressures on food and fuel. And I think that is positive for a consumer perspective. And then hopefully from a SARB perspective, that would spur them to cut interest rates. But nonetheless, I think if you look at Foschini's portfolio, they've got quite a broad range of different offerings, whether it's clothing, whether it's on the beauty side or home side. And any uptick that we do see in the economy, they'll be quite a good beneficiary of that. And then just the latest acquisition that they've made out of the UK, which is called White Stuff, that they bought it on a very good multiple. That margin is depressed. And I think Foschini has sort of the tools to increase that margin and make it a value accretive acquisition over the next few years.
Well, thank you so much for your time and for your insights on what has moved investors' money today, Imtiaz. That was Imtiaz Suliman from Sentio Capital.